specific to locations, kind of property. It's so specific that you will have to do some good research around that. Appreciations happen in pockets. Appreciations do not happen in certain pockets. Certain pockets give you better rent yields. So it's always important to do good research on real estate before you go and buy, because it can also end up that you buy real estate and you're not able to liquidate it when you need it, because that particular pocket is not done well, and hence it can be a investment which gets stuck.
Actually, the other thing you have to compare when you're talking about real estate is that it's a very, very high maintenance investment. That you have to, there is a lot of money that goes into just maintaining a piece of real estate. If you're going to give it on rent, the fact that you have to also constantly manage that relationship and you have to constantly worry about it. Whereas if you invest in an investment like a mutual fund, there's a little bit of a cost which is much lower than real estate, and you don't have to actually worry about the paint chipping or the water leaking or any of those things. So it's an easier investment, especially when you're a young, busy retail investor. We're going to take another very quick break, but when we come back, we'll answer more questions about asset allocations and all of the options available to you and me as retail investors. Don't go anywhere.
Has a job to do. Good economics can also be good politics. This is a cool budget. I have to confess, I am disappointed because single issue right now, do you think this was bold enough? You have to create a situation where productivity increases, where more investment comes domestically, where more investment comes from outside, where foreign institutional and other finance flows into the country. If Jaitley is able to hold out a credible and promising vision for the next 5 years, how he is going to do it?
In association with Binani Cement for generations to come. Thomson Reuters Icon. Seek more, find more, profit more. RP Sanjeev Goenka Group. Growing legacies.
The purpose of business is to make profit. But these dynamic entrepreneurs are changing the rules of the game in every way.
Our vision in Eureka 4 would be to become a global leader in the areas of health, hygiene.
मुंबई की लाइफलाइन रेलवे ट्रेन है, इलेक्ट्रिसिटी है, वैसा आउटडोर की लाइफलाइन ब्राइट हो जावे उस तरह का मैंने सपना देखा है.
Catch visionary entrepreneurs share insights on achieving the pinnacle of success. Next Brands presents Brand Vision 2020.
We hope that we should be able to give the best what students need today in terms of education.
We are digital in the sense that we are a technology company. We are making this entire offline process of transportation online.
An inspiring series on outstanding entrepreneurship, brand leadership and dynamic vision for India for the next 5 years. Only on ET Now. Brought to you by Next Brands.
Welcome back. You're watching the Swatantra series on ET Now. Thank you so much for staying with us. We have a lot of questions to get through before we wrap up the show. The gentleman in the front, go ahead.
My first close-ended question is that whether this mutual fund falls under RTI Act. Second extension is that whether I as an investor, what are my rights to understand and monitor the whole system of this mutual fund, because after all it's my money, and logically what it means is that due to lack of time or whatsoever reason, I am passing on this responsibility of managing my funds to a fund manager who is charging me for it. So is there a band of these charges that will be levied on me, and what monitoring can I have over this?
So I'm not sure about the RTI part and we'll have to come back to you about that. But for the other, we are probably one of the most regulated spaces in the financial services sector, so there are clear guidelines laid down around portfolio disclosures, everyday valuations through NAVs which come in, and what are the charges you can charge an investor who's coming into fund depending on the size of the fund. So those disclosures are mandatory and everyone follows, and that, and added to that, each of the fund houses really have their own investment processes and guidelines which are monitored by somebody called a trustee board which oversees these processes, and therefore they are in the interest of the customers.
Actually, since you're speaking on behalf of UTI as well, tell us this. If, as an investor, I have a question about anything at all to do with my fund, who can I write to at UTI, and will you answer my questions?
Absolutely. So I think we would definitely love to answer your questions, but I think we won't have too much information. We give away all the information is virtually available, you know, right from the portfolio, what is the underlying investments in each of the mutual funds, the price, the NAV which is declared every day at the end of the day, and the logic. So if you've chosen a certain project, the logic of building that product is also stated as an objective, and you can check us for our consistency, whether we are meeting that stated objective or not, and validate that.
There's a question from the gentleman in the back. Go ahead.
My question is very simple and basic. Investing in new units at par and investing in existing schemes at NAV, what are the advantages and disadvantages? Because many people are not aware of it.
A lot of people think that when I get in at the NFO period, I'm getting some sort of an advantage. That's not true at all.
I'll give you a simple answer. There is no difference.
There is no difference, yeah.
There is no difference because if they invest, it's investing in the underlying stocks, and the way the stocks appreciate is how your NAV appreciates. So there is no difference or no advantage if you actually come in at an NFO stage or you come in into a fund which has got some past track record.
There is a small advantage. The fact that a fund with a past track record, you can actually take a look at how it's done or how that philosophy has turned out. But something that's just launching now, you have no way of telling whether or not that philosophy will actually work out.
Psychologically, I think the way it has been sold is on this whole play of 10 rupees becoming something, and that's why people are a lot more familiar with it. But I would go with what Faye was saying. You know, if you have underlying performance and consistency, then I would put my money there rather than go in for a new fund.
I'm going to take one more question. I want someone who hasn't asked a question before. Yes, sir.
See, I'm a very new investor, so my all investment is in all government thing. So I have a loan also. So I would like to ask question, how should I start, because my half of my salary is going into loan, and I have a goal also for my family, for my kids, so how should you suggest for that?
I think it's never too late, and you have to start one day, so start today. That's the first thing I would want to say. Second thing I would say, if you already have a loan with you, and it's most probably for a house that you have a loan, which is a property which will be required, first please put in a protection around that loan amount that is there. If you are the breadwinner and you are the one who's servicing the loan, please put a protection around that piece. So buy an insurance which is covering you for the amount which is there for the loan. Then whatever is your balance surplus income that you have, start with any smallest amount that you want to start with. Even if it's 1,000 rupees a month, even if it's 2,000 rupees a month, make that beginning and keep on investing regularly in a disciplined manner. It will help you reach a goal, which is, because the benefit of compounding is something that you will only see once a couple of years have gone. Then you realize that how the compounding benefit helps you in your investment. Again, I would say when you're looking at goals, whether it's child education, put the time in mind. 10 years from now, 15 years from now, what is the time? Put an amount in your mind and then do a back calculation, because only then you can do planning which is systematic, and you will understand that you will actually end up reaching your goal and not leave halfway through on that goal.
Please, I have a very quick follow-up question for you, and this is for everybody else who's watching as well. If I have a running home loan right now and I have a little bit of margin on my salary, I have two choices. I can increase the EMI and pay off the loan faster, or I can invest that money in a mutual fund right now. Which is basically, I'm asking you if the mutual fund will give me better returns than the home loan interest rate.
Absolutely.
But which side of the fence are you on right now?
Oh, it really depends on what is your EMI. Okay, so because government gives you tax benefit on EMIs, you must consider your interest outflow on EMIs net of tax. So if you're paying, let's say, a 10% interest rate, I'm just making it simple, and you're in 30% tax bracket, your actual interest of holding that loan is 7%. If your other investment is giving you more than 7%, then why do you want to repay your EMI? However, if this equation starts to tilt, that your other investments will not give you as much return as what your net of tax investment interest outgo on the loan is, then it is better to prepay. These are tactical goals. However, if you have goals in mind, so let's say if you have a goal of child education, only your EMI will not help you reach there, and your EMI will continue till that point. It's important to start towards a goal as well. Please prioritize your goals. Don't focus only towards one goal. Prioritize your goals, put some money in each and every goal bucket and help it grow, rather than just focusing on saying that I will first clear my EMI, then I will start preparing for my child education.
Actually, this is the general feeling that I should clear my EMI first. After that, I should start something. So here I also want to ask that what should be the benchmarking in investment in equity, in MF, and into other funds? Is there any benchmarking if I am around 39 or 40-year-old and I will retire out at 58, so I have a horizon of 18 years. So in which instruments I should invest, and what should be the percentage, if you can throw some light?
So when you're saying 18 years, I'm assuming you are investing for your retirement.
Yeah,
okay.
Absolutely.
So you're investing for your retirement. It's not an interim goal which is coming in between. You have an EMI which is running, so you also need to see when is your EMI getting over and what is the amount of EMI installment as a percentage of your I would say salary or gross income that you are incurring. If that percentage is too high, I would suggest bring it down. As long as it's below 40%, maybe around 30% of your gross income, it is manageable. You should be able to manage it well, and you can still have some surplus income towards your goal of retirement and investing towards it. Coming towards your goal, 18 years away, I think it's very favorable to put your money into equities. However, if you're an investor, don't look at direct equities. Look at equities through mutual fund, because there you have a professional person taking care of equities. Look at a diversified mutual fund, maybe 2 mutual funds you can do across fund managers, but that's what you should look at. Increase a little bit of debt component as you reach closer to it, to your goal, and then systematically move out of the entire equity mutual funds to debt accruals, and then maybe move out and your retirement comes in.
As a quick thumb rule, normally you use 100 minus your age in favor of equity to debt assets. So if you're 39 or 40, 60% in equity and 40% in debt would be a good place to start with.
All right, we've run out of time on the show, but the conversation will continue here on the studio. I just want to bring to your attention that we have a special website running alongside this particular show for the next few weeks, the India Invest Karo website. You can go onto that website. It has all of the information you will need about investing your money. We'll also have videos of this show if you'd like to listen to something again or you'd like to get in touch with us. Just get on that website. It'll run alongside this entire series for the rest of the year as we're here to help you through making all of your investments. Gentlemen, thank you so much for joining us in the studio and answering our questions. What a wonderful audience we've had. I've had such a good time. If you'd like to join us in the studio the next time, get in touch with us on the India Invest Karo website. Thank you so much for watching.
Brought to you by UTI Mutual Fund. हक एक बेहतर जिंदगी का.
Mutual fund investments are subject to market risks. Read all the scheme-related documents carefully.
हटो खाना बनाने दो. जाओ.
मैं तो सिर्फ थैंक यू कहना आया हूँ.
क्यों?
अपनी नई घड़ी के लिए.
घड़ी?
आपने दाल चावल को पकाने से पहले भिगोया.
हाँ.
और आप प्रेशर कुकर का भी इस्तेमाल कर रही हो.
हाँ.
इससे सिलेंडर ज्यादा दिन चलेगा और हम सालाना गैस बिल पर 1000 रूपए तक तो बचा ही लेंगे. आ गई ना मेरी नई घड़ी. बात तो एक ही है ना.
खाना पकाने से पहले उसे भिगोएं और प्रेशर कुकर का इस्तेमाल करें और सालाना 1000 रूपए तक बचाएं. Brought to you by PCRA in public interest.
Win a car. Win a bike. Win a phone. And lots more. Every day for 100 days. Watch Hollywood's biggest blockbusters every night at 9. And you could win lots of prizes. 100 days, 100 blockbusters, 100 prizes. 100 Mania. Every night at 9.
Deal.
Only on Movies Now.
जूनियर को इसी घर में लाओगे क्या?
देखें.
Only brand new. Let's go higher. 10th floor.
चाहतों की लिस्ट बना के ख्वाहिशों की छन्नी लगा के अपने ख्वाबों का ठिकाना ढूंढते हैं.
उठो.
हाँ ढूंढते.
घर आ गया.
magicbricks.com. पाइए प्रॉपर्टीज की सबसे ज्यादा ऑप्शंस और उनसे जुड़ी हर जरूरी जानकारी. तो घर चुनिए मुस्कुराते हुए. magicbricks.com. प्रॉपर्टी सही मिलेगी ही.
let us put our hands together as I'm privileged to introduce our guest of honor, Shri Narendra Sinhaji, Special Secretary and Development Commissioner, Ministry of MSME, Government of India.
Friends and this very distinguished audience,